Welcome to Tesla Daily News Podcast for Friday, January 9th, 2026. Today, we're tracking the biggest Tesla headlines that matter for the stock: autonomy competition heating up, new regulatory risk around Tesla-style door designs, demand tactics in China, and the wider physical AI robotics wave that could reshape Tesla's long-term story. First up, Nvidia just threw gasoline on the autonomy race, and investors should pay attention. The hook is simple. Nvidia unveiled Alpamayo, and it signals that unsupervised autonomy won't be a Tesla-only game. The context here is Tesla's valuation. A meaningful chunk of bull cases relies on full self-driving scaling into high-margin software revenue and eventually robotaxi economics. The details from the coverage: Alpamayo is positioned as an open model family for autonomous driving and is being framed as a platform that other automakers can build on. On top of that, prominent Tesla investor voices like Gary Black are saying the quiet part out loud. Once the toolchain and models are broadly available, unsupervised autonomy could be democratized quickly. The impact for Tesla is nuanced. In the near term, Tesla still benefits from its fleet data flywheel, integration, and ability to push software updates fast. But Nvidia pushing a more standardized, widely deployable stack increases the probability that multiple OEMs reach good enough autonomy around the same time. That matters because Tesla's autonomy upside is partly a winner-take-most narrative. The takeaway: watch for how quickly Nvidia's ecosystem turns into shipping regulated products. The stock impact likely comes less from CES announcements and more from real deployments, safety stats, and regulatory approvals. Second story: Elon Musk responded to the Nvidia autonomy push with a very specific timeline, and that timeline is a tell. The hook: Musk says Nvidia's self-driving tech won't pressure Tesla for about 5 to 6 years. The context is competitive signaling. When Tesla's CEO puts a multi-year buffer on competition, investors should ask, is that confidence, or is it an attempt to keep the narrative focused on Tesla's current lead while competitors catch up? The details reported: Musk argues that even if Nvidia's software is strong, legacy automakers will take years to deploy it at scale. That's plausible. Autonomy isn't just a model. It's validation, safety cases, hardware integration, servicing, and compliance across jurisdictions. The impact: if the market believes Musk's 5 to 6 year window, it supports a longer runway for FSD monetization, particularly if Tesla can keep improving FSD supervised and convert more owners to subscriptions. But if evidence appears sooner that Nvidia-enabled systems are rolling out reliably, the market could reprice Tesla's autonomy optionality. The takeaway: treat 5 to 6 years as a forecast you can test. Track competitor pilot programs, Level 3 approvals, and insurer data. Third, the new U.S. safety bill is targeting a design language Tesla helped popularize, and this is a classic regulatory headline risk. The hook: proposed legislation would require manual door releases in new cars. The context is emergency egress and safety perception. Electrified door handles and electronic release systems can create confusion during crashes or power loss, and lawmakers are reacting to high-profile concerns. The details: a U.S. lawmaker is proposing a requirement for manual releases aimed at addressing safety concerns around electrically powered handles. Tesla is not the only automaker using these designs, but it's the brand most associated with them. The impact on Tesla's business is probably not existential, but it can matter on margins and refresh cycles. If rules tighten, Tesla could face redesign costs, supplier changes, and potential retrofit questions in public discourse, even if the law only applies to future production. Just as important, safety narratives can influence consumer sentiment and, by extension, demand and residual values. The takeaway for investors: monitor whether this becomes a real legislative path or stays as a proposal. Also watch for NHTSA commentary and how Tesla responds in future vehicle refreshes. Fourth story: Tesla China is using aggressive financing to defend demand after a tax headwind. The hook: Tesla is pushing a 7-year ultra-low monthly payment plan for Model Y in China. The context is China's brutally competitive EV market, where pricing, subsidies, and financing tactics often decide market share quarter to quarter. Demand elasticity is high, and Tesla's pricing power is always under scrutiny because it feeds directly into gross margin. The details reported: the offer highlights low down payment, a long 7-year term, and an annual rate around 0.5% for Model Y 5-seat variant, positioned specifically against the impact of a renewed 10% purchase tax. The impact: this can support deliveries and stabilize utilization at Gigafactory Shanghai, which the market generally likes. But investors should also read it as a margin signal. When you stretch terms and subsidize rates, you're often buying demand. The key question becomes whether Tesla is protecting volume at the cost of profitability, or whether it's mainly shifting the financing economics through partners. The takeaway: watch for signs that incentives are spreading beyond Model Y or expanding to other trims. Incentive creep is one of the most important margin tells in the EV space. Fifth, the semiconductor ecosystem is reorganizing around robots and autonomy, which indirectly validates Tesla's AI plus manufacturing thesis. The hook: ARM just launched a new physical AI unit aimed at robotics and intelligent cars. The context here is Tesla's positioning. Tesla wants to be seen not just as an automaker, but as a vertically integrated AI and robotics company, spanning autonomy, Optimus, and factory automation. The details from Reuters coverage: ARM's reorg explicitly groups robotics and automotive autonomy under a dedicated physical AI umbrella, reflecting demand for chips and platforms that bridge perception, planning, and real-world actuation. The impact: it's supportive for Tesla's long-term narrative because it shows the broader tech supply chain is betting on embodied AI as a major growth category. But it also means the competitive field is getting deeper, with more tools, more silicon, and more standardized platforms that could lower barriers for Tesla's rivals. The takeaway: investors should keep two ideas in their head at once: validation of the market and faster commoditization of the underlying components. Sixth, robots are arriving in warehouses and factories, and Tesla's Optimus story sits inside a crowded, rapidly accelerating field. The hook: CES coverage is reinforcing that industrial robots are moving from demos to real deployments, with Tesla aiming for serial production this year. The context is Tesla's long-duration optionality. Optimus doesn't affect next quarter's deliveries, but it could affect how the market values Tesla as a platform company if credible progress continues. The details: reporting highlights Boston Dynamics moving toward an industrial robot release and notes Tesla beginning serial production, reflecting a broader shift from prototypes to commercialization. The impact: if the market starts to see humanoid and industrial robots as a near-term capex-saving tool for manufacturing and logistics, Tesla could benefit in two ways. First, by using robots internally to improve cost and throughput. Second, by potentially selling robots into a massive labor automation market. The risk is execution. Robotics is hard, and competition is not theoretical. The takeaway: for Tesla investors, watch for measurable milestones: unit volumes, factory deployments, task capability, and cost per unit. One quick extra item to keep on the radar: branding and product naming can create friction at the worst time. Reports suggest Tesla's Cybercab name may be challenged because another company filed the trademark first in the US, potentially delaying or complicating Tesla's use of the name. It's not a core fundamental by itself, but for a company selling a future robotaxi narrative, clarity and control of branding does matter when launching a new category. Let's wrap it up. Today's big themes are: autonomy competition is widening as Nvidia and the broader ecosystem push open and scalable stacks. Regulation is a real headline risk, with door release requirements now being discussed in Washington. And Tesla is actively defending demand in China through long-term, low-rate financing that could support volume but raises margin questions. For tomorrow, keep an eye on two things: any follow-through details on competitor autonomy timelines and real-world deployments, and any additional signs of incentive expansion in China. If you found this useful, subscribe to Tesla Daily News Podcast and follow for a fresh, investor-focused Tesla roundup every day.